Hello everyone, welcome to the Ichimoku.co daily futures market review for the trading day ending Wednesday, August 5th. Firstly to gold futures, and here we see the market continuing to trade down below each of the Ichimoku indicators, well down below the Ichimoku cloud, suggesting we have a very strong bearish bias in the longer term time frame, looking a little overextended in the depth away from the cloud. And any attempt to retrace back towards the cloud has been resisted by a zone of strong resistance extending from roughly about the 1110 area down to this 1084 region. We see all of this indecisive trading as the market was trading within this congestion area that's formed down below both the cloud and the Kijun-sen indicator. The market has attempted to rally through the Tenkan-sen, breaching it just once in all of that time and in a very indecisive manner. And for the last 4 occasions we've tested up through there, and the market has been quite strongly rejected. Now, having said that, however, we've also seen the market unable to breach the 1084 level of support and a zone extending down to 1072. But this bearish activity with the market trading down below both the cloud and the Kijun-sen suggests that if we can build some momentum and breach one of these areas and then eventually breach 1072, we could quickly see gold futures trading down to the next support level at 1044.5. Now, this congestion area that's been built up over the last couple of weeks is forming something of a symmetrical triangle pattern. It's a little bit too big to be a pennant, and therefore there is a very good possibility that it may be completed as a symmetrical triangle. What we're looking for is a breakout either to the downside or the upside. They can be either continuation or reversal patterns, but I suggest that in line with the market being negative in those longer term timeframes and the medium term timeframe, that we are likely to see the breakout to the downside. So what we want to see is a close down below the bottom barrier that would complete the pattern, and to have greater confidence in the move extending down to the target, I'd like to see a bearish close. Any bearish close and then strong follow through could see the market meet the target roughly about this 1050 level, and the target is the width of the pattern projected from the area of the breakout, so we haven't broken out yet. Now, also remembering that when drawing these targets on the chart, it shouldn't be done on a log scale. These drawings should be done on an arithmetic scale. Now, obviously, if the breakout is later, then the target will be modified, because we'll just be moving that projection here in the direction to the right. Moving next to NYMEX oil, and here we've seen some strong selling coming into the market today. That followed the bullish type candle, a white body candle, suggesting a possibility of the market trading to high levels. This candle did trade to high levels. It found strong resistance at the previous support level, 46.72, a very important area. Very, very negative market in all 3 timeframes, trading well below the Ichimoku cloud and looking very, very overextended. But any attempted rally has seen strong selling come back into the market. If we do see the market rally through 46.72, expect to find strong resistance at the Tenkan-sen, 47.18. But the market today found support at 44.78, some rejection from there. But if we do see a strong bearish breach down below there, we could quickly see NYMEX oil trading down to 42.45. Next to wheat futures, and here we see some selling coming into this market today. A candle that is still in an uptrend. The uptrend was established for the previous day's trading, with that candle forming a higher high and a higher low. In bar chart terms, we have an inside day here. The sellers weren't strong enough to take out the previous low, but not strong enough to breach the high. But the previous trend remains in force. And on the back of this build of momentum, forming a white body candle, some solid upside momentum in net terms, a bullish close and some bullish follow through. It suggests that we could see this market trade higher. Breaching the 500 round number level in a bullish manner suggests that if the buyers are strong enough to breach the Tenkan-Sen resistance, and there's no guarantee of that happening, but if they are strong enough to breach that resistance, we could easily see wheat futures trading up to 516.50. At the moment, however, we are seeing the Tenkan-Sen hold as very strong resistance, and this suggests that there is very, very solid downside momentum in this market, and we are now testing back down below the round number 500. 496.50 could see some support come in, but if that area is breached, we could easily trade down to 488. Next to corn futures, and here we've seen some buying coming in on this black body candle. The buyers closing with control following the indecision of the previous day's trading. The market just bouncing off the very small amount of support around the Ichimoku cloud, and the cloud is very, very thin, so the amount of support that we're going to get there is quite weak. At the moment, this current candle is opened below the cloud, and suggesting that any strong bullish activity could see the market breach the cloud to the upside. But I suggest that with this strong downside momentum that we've seen in this market for quite some time, the Tenkan-Sen trading roughly about 387 is likely to hold as very, very strong resistance. At the moment, support coming in at 381. Any downside pressure will see the support area 376 come into play, and that has been an important area in the recent past, holding for the 3 of the past 4 consecutive candles. Next to US 30-year bonds, and here we saw 3 days ago the market breach through the top of the Ichimoku cloud, technically changing the trend in that longer term time frame to bullish. And if you recall, what I want to see is strong follow through after a breakout, and we didn't see that. We saw the sellers immediately come back into the market with a bearish candle, and the sellers for today's trading have continued with this solid bearishness. A body is very similar to the size of the previous body, suggesting that we still have fairly strong negative momentum in this market in net terms between the open and the close, and a day where the sellers have continued with control, although they did lose commitment down below the Tenkan-Sen indicator. And this suggests, with the market unable to close below the Tenkan-Sen, combined with the very strong price rejection of the Tenkan-Sen prior to today's activity, about 4 or 5 trading periods ago, it suggests that we have a very, very strong bullish bias in the fast term time frame, and we're likely to see some buying come in. Now, the problem for the buyers is going to be the potentially strong resistance around the top of the Ichimoku cloud, roughly about the 156 area, and that may halt any breakout to the upside, and we could then see the market trading back down below the Tenkan-Sen. If we do see activity below the Tenkan-Sen, looking to 154.27 to hold as a strong support. Next to the S&P 500 futures on the hourly charts, and for today's session that has completed, we saw the market open down below each of the Ichimoku indicators. From that point, we saw the market rally quite strongly, initially finding resistance at the middle pivot point level, trading through to the Kijun-Sen, finding some resistance there, but breaching up through all of the Ichimoku indicators in a strong bullish manner to trade through the second pivot point resistance level. At the close of trading, the market closed around the Ichimoku cloud support at the top of it, and for the last few sessions we've seen the market hovering around the top of the cloud, at the moment just breaching through there in a very indecisive manner. If we do see the market rally and bounce off cloud support, we have very strong potential resistance around the middle pivot point level around 2093, with the Kijun-Sen and the Tenkan-Sen trading around that area. And a strong bullish breakout up above there could see the market test up to the first resistance level, which is a fair way away, around 2106. Any selling coming into the market and a solid bearish breach down below the bottom of the cloud, 2087, could easily see the first support level at 2082 test.